Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of more central bank surprises. But first, the number of Americans filing for unemployment benefits fell more than expected last week, hitting its lowest level since October and pointing to sustained strength in the American labour markets that should further dispel fears of a recession in the US. A new poll of economists show they expect the US Fed to raise their policy rate at least twice more in 2016. And the net worth of American households ended 2015 at the highest levels on record, driven by equities and bonds that remained at high levels and the continued rebuild of home equity. That's according to the US Fed report out overnight. Their households had total net worth of $87 trillion, or 4.5 times their GDP. Wealth climbed by more than $1.6 trillion in the fourth quarter alone, or almost 2%. This wealth effect is a key reason the American economy is central to world trade and the well-being of many, if not most, other countries. Across the Atlantic, the ECB hacked away at its official rates, dropping them to record lows. They dropped their main rate to zero, their marginal lending rate to 0.25%, and their deposit rate is deeper in negative territory, now at minus 0.4%. The goal is to get banks to lend rather than to hold cash. The problem for EU banks is that opportunities for lending are not great, and defaults and impairment loans are rising. In addition to the interest rate levers, the ECB raised its quantitative easing, that's its asset purchase program, from €60 billion per month to €80 billion, an increase of 1/3. This was something of a market surprise, another one coming after yesterday's RBNZ surprise. Markets generally approved, but the euro strengthened, so go figure. Part of the riddle of global trade levels has been revealed by an Australian analyst. While values have fallen and garnered much of the attention, trade volumes have hardly moved. Just as much world trade is going on as previously, only it is cheaper. Certainly that is what the New Zealand dairy sector is experiencing. The pricing reset is ubiquitous and not making national trade balances any different anywhere, including for New Zealand. In New York, the benchmark US Treasury 10-year yield is up and will start today at 1.9%. Local New Zealand swap rates fell very sharply yesterday and have stayed down in overnight trading. Risk premiums also fell sharply following the ECB rate moves. There is now plenty of room for banks to lower fixed mortgage rates if they have the funds sourced from wholesale markets and sourced them recently. Those banks reliant on deposit funding, which will be most of them, will first need to make some uncomfortable reductions to their deposit offers if they're to match the drop in wholesale funding costs. The oil price fell and is marginally lower today at $38 a barrel in the US, while Brent is at $40 a barrel. Hopes of an OPEC supply freeze have evaporated. The gold price is up $14 an ounce in midday trading to $1,271 an ounce, and the New Zealand dollar will start today lower after the OCR cut reset. Is at 66.7 US cents, at 89.6 Aussie cents, and at 59.7 euro cents. The TWI is back down to 70.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.